Hello and welcome to episode 17 of the Dumb Money Show. I'm your host, Ali Suleiman, usually here with a co-host, either Manan Shabir or Naman Akhtar, but unfortunately they're both ill and they send their apologies. But I thought today, it's our first episode back after almost a 2 week break, and it's a really important episode. I mean, we've got our economic overview again. We're going to be talking about the politics. Obviously, for us, the election just finished, so we're going to talk a lot about that. I mean, especially me who stayed up like quite long of the way. But as usual, we're joined by Dylan Ilett and Jeremy Okornoe, our resident equity and crypto experts, respectively. But yeah, Dylan, how you doing, bro?
I'm good, thank you. How are you?
Yeah, all good. Same old, same old. Jeremy, yourself?
Great to be back. I'm doing good. And you?
100%, man. Yeah, all good, man. All good. So just kind of to, first of all, where you can probably thinking, what's the change with the studio? We have got a little studio refresh for our regular viewers. And there's more to come, especially when we've got our co-host back. New equipment, new lighting, kind of just like a new layout, a bit more minimalistic, just to show that we're really going above and beyond to make the listening and viewing experience better. But yeah, to kind of intro what we're going to be talking about and the sort of plan we have for the episode. So we're going to start off as usual with our economic overview, discussing kind of, the FOMC, inflation, PMI, a few other bits and bobs. But then we're going to really delve into politics and the election. Obviously, as we know, as you will know when this episode goes out as well, Keir Starmer is our new Prime Minister. Labour won by a huge majority, over 200 seats. And there were some surprise wins and some surprise losses. I mean, senior Tories, Jacob Rees-Mogg lost, Penny Mordaunt, a few others. Independents like Jeremy Corbyn won. Nigel Farage became MP for the first time. Reform did surprisingly well, although some expected them to do better. Lib Dems did really well. Greens did the record night for them. But yeah, as expected and as predicted, Labour has become the majority, and Keir Starmer will probably move into Downing Street later today. So we're going to look into how markets are reacting to that, but also the sort of outlook this could have on our economy. What's different between how the Tories govern and how how Labour governs, and just looking into that. But then also we're going to cover smaller crypto news. We're going to cover small crypto news all the way to Bitcoin, as we always do. Making sure to cover those niches, but then also not forget about the bigger picture. We're going to talk about Nvidia. Yeah, I'm sure you all know that Nvidia hit #1 company in the world, but then they dropped almost $500 billion in the following day. So we're going to talk almost the full story about that. Again, going to go into crypto forecasts and price actions, and maybe even a potential new stock exchange as well. So that's a new story we're going to cover, among a few other things as well. But first, Dylan, I'll come to you. Give me your sort of economic overview. What are some key things that you feel have stood out in the last, month or so that we haven't talked?
So it appears as though we're still on track for a rate cut to come this August, according to the Bank of England. And they've also released some other data regarding stocks and shares and the overall pricing of the market. But one thing I wanted to touch on specifically was inflation in terms of our shop prices. So Bloomberg released 3 days ago that in May, shop prices are rising at a rate of 0.6%. However, that's vastly dropped to 0.2% in June, which has obviously led to more shoppers spending more money, which is obviously an overall rise in consumer spending. So it seems as though there's promising signs in terms of our inflation data, which is obviously going to have a favourable impact on the equities markets. So in terms of the Bank of England, what they have said that they believe that the FTSE 100 is slightly overvalued, and they believe that soon there's going to be a correction with asset prices. However, this is obviously from one organisation. It's not necessarily true. It's just what they believe. So this is a statement coming from Bank of England. They said that the prices of many assets, including shares and bonds, were elevated compared to historical norms. So my initial issue with comparing with historical norms is every index is going to rise over time. So even though perhaps in the state that we are with, we've just had a new prime minister elected, there's wars and global conflicts around the globe. Even though we are above historical norms in terms of the performance of the FTSE 100, I believe we're up 5.7% now over the midway point of the year. Um, it doesn't necessarily mean that we are going to see a fall. They've just stated that investors should maybe be a bit more conservative and understand that some asset prices have surged. For example, we've seen Rolls Royce, we've seen a lot of defence companies that have increased in value over the past few months. So maybe this is what they're talking about, but obviously, until we see more data stating that there are overvaluations with asset prices, I don't think it's too much to worry about at all.
Hmm. Yeah, that's really interesting, and it was something I wasn't really expecting to hear from the Bank of England. Do you think that there's a market correction that's going to really come soon? And if so, how might that affect domestic and international investors as well?
I don't necessarily believe there is a market crash to come soon. Obviously, there are a few different assets that are perceived to be in a bubble. For example, we're going to touch on Nvidia later on in the episode. However, I believe in terms of the UK equities markets, obviously compared to historical norms, the Bank of England believes that the prices are elevated. But overall, if you look at the majority of the FTSE 100, a lot of the companies are still undervalued in terms of their price to earnings ratio, in terms of their price to book ratio. And I believe that obviously with the new election, new prime minister, the markets have seemed to react favourably to that. So it's just a case of seeing what's going to happen over time. But I don't think there are many equities in the UK that are overvalued and to the point of which they would crash and we would see quite a catastrophic impact on the market. But overall, I believe that the FTSE 100 and the UK equities market is relatively stable.
Yeah, interesting, very interesting. Jeremy, I think it's a great time for you to jump in as well. I know you wanted to cover a few bits and bobs over the economy, but yeah, to you, what do you think has stood out to you over this sort of month and a bit of the economy?
So I've definitely had a look at the FTSE on a more technical basis and looking at the price action, and it is trending in a strong uptrend. So I definitely wouldn't fade the trend, and I do think that it's still going to remain stable. I do agree with Dylan there, and there are a lot of UK companies that may be undervalued that may, you know, trend with the FTSE 100. But I definitely say that looking at some sort of crash or major turn is unlikely on a technical basis as we are still making higher highs and higher lows. The charts still look good, and the momentum oscillators on the weekly chart level are all reset, indicating further moves, perhaps later in August, September. And it's quite similar to the S&P as well, as we see, the Nasdaq, the S&P are still doing quite well. So I definitely say that if there was to be some sort of crash, it wouldn't look good for the elected individuals in the US and the UK. So definitely, I do think that markets are still gonna do well, and it's gonna keep an eye out on the data that does support that thesis because the fundamentals do drive the technicals. So having a look at inflation, we have for the US specifically, we have unemployment data coming out. I think later today actually, and then next week we have our CPI data, and we had inflation falling as well from the April data and May data. So it'll be interesting to see if we can come down for the June data, which may give leeway to Powell to reduce rates. But I do think that comes later in Q4. So for now, the percentages are 91.2% that we're going to halt rates. So it'll be interesting to see what the data is and how that would impact Fed Chair Powell's decision whether to reduce rates or not.
Yeah. Do you think the market kind of shares your sentiment about, a later rate cut, kind of near the end of this year, despite inflation being where it is. And what sort of sectors in the US and even the UK as well, I'm sure they'll share some. What sectors do you think are feeling the most pressure from this inflation?
I'll say definitely the market is pricing in rate cuts. So to even get one rate cut this year, markets will do quite well. Like I think people will be happy with one rate cut. We were promised a few more rate cuts at the start of the year. It was forecasted that we'll have about two or three. However, I think with one rate cut, the party continues in markets. I think we continue to rally. And looking at specific sectors that might benefit from rate cuts, I would say potentially perhaps maybe the energy sector I've been looking at. And I'll most likely say just the energy sector, perhaps agricultural sector with prices coming down for food and things. Maybe they may see more demand. But yeah, mainly just energy and agriculture, as prices may come down, leads to more demand, more sales revenue for companies. So it'll be interesting to see. But just looking at the market again, I think with one rate cut, markets will be quite happy with that.
Yeah, I guess we'll find out next week when we get the CPI data. I think that's a great overview, just touching on a few important points. But I mean, I guess what everyone's waiting for, including myself, is elections. They're brewing, the big ones. US is brewing and UK is just finished now, or just about. I think there's couple seats left to be announced right now. But I think let's start with US. Obviously, we've had debates. We had market reactions to the debates. We have had, news outlets completely, change their stance on Joe Biden. I mean, I saw the Economist, in 2020, there was literally a headline saying, why Biden is needed for the US economy or something like that. And now they're saying why Biden needs to retire out of the presidential race. So it's quite interesting to see the quick flip just off of that one debate. But Dylan, coming to you, what have you seen those debates? How have markets kind of reacted? What sort of impacts have you seen? And where do you see the US elections going?
So, in terms of the debates, obviously between Trump and Biden, it, from my perspective, from the things they've discussed, it hasn't entirely been a case of where it's been in the UK. In the UK, we've spoken about what each party is going to do moving forward, whereas in the US, it appears that Biden and Trump just seem to want to insult each other ultimately. I mean, you've seen Trump talk about Biden's cognitive capability and his age, and Biden's touched on the fact that Trump has an ongoing court case for defrauding the United States. So, to be honest, it just seems like a boxing match between the two. And to be honest, I feel like a lot of people in the US don't entirely know which which one of them are going to do what. There hasn't been too much talk on Biden wants to implement this policy, whereas Trump wants to implement this policy. It's just been an overall boxing match. So I think the markets in the US they've continued to grow, and overall moving forward with Biden or Trump, I really cannot call it. I think it's going to go down to the wire, and definitely with Trump and his court case, it's the case of what's going to happen with that as well. Because at one point, people thought he wasn't even going to be able to run. So I definitely think it's not as easy to predict as maybe the UK election has been. Um, but yeah, it's a case of seeing what's going to happen, especially with Trump and his personal issues with the law in the US. And I think the overall mood in America is a lot of people do support Trump, but I think on the other hand, if he's a convicted felon, you wouldn't want someone running for your country if you're a convicted felon. So it's a very, very difficult situation to predict and actually gain a proper understanding from, because it's just insults back and forth between the two.
Yeah, I think it's a really interesting situation in the US. I mean, I think you've got your die-hard Trump voters that there's literally probably nothing that he could do or be convicted of that would stop them voting him. And it's quite crazy in a way that the US laws are actually that lenient on who can run for president. But setting that aside, yeah, so you got your Trump diehard voters that, no matter what he does, if he continues to run, he'll be voted in by them. But then you've also got your kind of anti-Trump voters. And what I mean by that is no matter, even let's say Biden, miraculously he pulls out of the race, and then some like a Democrat replacement comes up. Those voters, there's not anyone they wouldn't vote for other than Trump. Sorry, the other way around. I mean, they'd vote for anyone other than Trump, and I think that's important. That's the kind of scenario that we're kind of dealing with. I mean, obviously with UK elections, which we'll come on to, we had 14 years of conservative rule, and so that kind of led to as you said, the predictions being a lot easier. But the political sentiment that we have in the US is very, very weird in a way, and it's something, as you said, it's going to be hard to predict, and we can see markets doing that as well. It's hard for them to kind of see where it's going, and we know how they govern. We know how Trump governs. We know how Biden governs, and so markets are probably leaning towards something that might be better off for them. But Trump's foreign policies are, a lot more harsher than Biden. So it's something that is definitely interesting. Jeremy, what's your thoughts on it, and how are crypto markets reacting to it?
So crypto markets are having an absolute field day with this. The meme coin sector is so funny. You're having coins created left, right, and center. Like Trump is a convicted felon. There's a coin called convicting felon. Every time they mention it, the coin pumps. It's just super, funny and things. We have Biden, and then that's a meme coin for Biden, and then we have Trump, a meme coin for Donald Trump. We have Donald Trump in you. There's a lot. So I think the crypto market are having a lot of fun with this race right here. There's a lot of memes being created. You have Trump coming out and kind of trying to support the crypto industry to get more votes. And you're having Biden kind of have to follow along and, put pressure on the SEC for the ETFs just to show that he and the Democrats support crypto voters. Although, like, before, it was absolute carnage. They were giving a lot of trouble to crypto investors. So I think crypto investors, we do forgive, but we don't forget. So you see a lot of crypto investors going for Trump, and Trump is leading by 50% after that debate, which was interesting to see. And there's talks around Kamala Harris coming in instead of Biden, so another Democrat to replace Biden. As after the debate, there's even more talks now of him not being fit for the role. So that'll be very interesting to see. But mainly, I prefer Trump to come in just because he's good for crypto. To be honest, that's the only reason, and he'll be good for markets as well. You had Biden come in 2022, and he done things like pass laws for the Keystone Pipeline in America, which led to oil prices absolutely surging, and gold prices doing numbers as well. So the Democrats are really sneaky with the ways they help themselves, or there's a lot of speculation and things, and like real facts that indicate or show what the Democrats do when they're in office. So it is very interesting to see what happens here, but it's looking like Trump is ahead at the minute. Things can change if, for example, Biden drops out of this race and Kamala Harris actually takes his place. But I'd say, yeah, crypto investors are having a field day with this.
Yeah, Jeremy. Yeah, that's really interesting, actually. I mean, obviously, I remember we mentioned in previous episodes that Trump is, he likes crypto and the crypto markets like him, and obviously Biden's going to jump on that bandwagon. I mean, when you're running for president, you're going to jump on every bandwagon. But I actually wanted to come to you now. We're going to move on to UK elections, probably, the big bulk of this episode. What are your thoughts on, Keir Starmer as Prime Minister? I mean, just from an economic aspect, I mean, we'll go to equities aspect with Dylan as well, but how do you see this affecting kind of crypto markets in the UK economy as well?
I'm not so clued up on the UK economy. I don't follow it. I spend a lot of my time and attention on the US economy, but just from like previous kind of observations, I would definitely say like a Labour government is extremely good for markets. Like when it comes to lowering rates and making sure the economy is looking good, and some kind of reforms, for example, fiscal policy reforms, lowering tax for citizens to have more disposable income, which may lead to markets rising as well. A Labour government is really more kind of welfare centric, I would say. So it will be interesting to see what happens, but I'm not too sure the potential benefits that may come. I'd have to see, but yeah, when it comes to Bitcoin specifically, it's more the US economy and the kind of laws that come from that. But at the same time, it'll be interesting to see if there's any like key regulations for like the exchanges that may get passed from the new UK PM. So yeah, that's what I have to say about that.
Yeah. Dylan, what's your thoughts on it? I know you, before we press record, we were talking a little bit about the UK elections. So what are your thoughts? We've got a Labour government. Where do you see us going?
So obviously, this time round, no party has been perfect in terms of their policies, and it appears that there will be sectors that will benefit from a reform or conservative prime minister, and then sectors that won't. And it's the same with Labour. There will be some sectors that will prosper under a Labour government, and then vice versa. So, in terms of overall business landscape, obviously there's concerns with Labour in terms of corporation tax. They said they're going to cap it at 25%. But obviously, until any party gets into office, it's a case of seeing what will really happen. But if they do cap it at 25%, I'd say that's relatively promising. Obviously, 25% is higher than what the current corporation tax is now. But one thing I wanted to touch on specifically was a certain sector that will probably benefit from this current election, and that is the housing market. So Labour have pledged to build over 1.5 million houses in the next few years. And we've seen over the past couple of years, due to high interest rates, for mainstream house builders, that would be in Redrow Homes, Barratt, Persimmon, Taylor Wimpey, they've struggled. And this is because obviously interest rates have been high, people haven't wanted to take out mortgages, which is obviously going to affect their revenue. So, and also the housing market, house prices have increased, which has made it definitely harder to purchase a home and obviously go into a mortgage. But with this pledge to build 1.5 million houses, it's obviously going to have a favourable impact. So, as of today, as of filming, as we speak, Persimmon's up 3.2%. Which obviously we're filming roughly 10:30 right now, so the market's opened 2.5 hours ago. So again, that's promising news. And I can see Barrett's up 2.1%. So definitely, we've seen the housing market immediately see a sharp increase in terms of the equities value. And obviously, coming with an increase in housing, obviously many contracting firms are going to favour and benefit from that as well, due to more opportunities to work on new developments, which obviously going to increase their revenue stream. So I think one specific sector that will benefit from this Labour government will probably be housing. Overall, with the economy, it seems that inflation is going to come down. And I don't think there's any policies with Labour that is going to impede that. So I definitely think that we will see a rate cut relatively soon, whether it's next month or the month after. I don't think anything drastic is going to happen in the next couple of months where we're going to completely go back on ourselves. But overall, like I said, it's a case of a party in their manifesto will have things that they want to do, but it's a case of Labour coming into office today and looking at the budget they have, looking at the spending that the Tories have been spending, what we've been using our finances on, and ultimately it's going to be a case of them deciding what we can and can't do based on their manifesto. So it's really a case of seeing what's going to happen over the next couple of months until we can finally decide whether the UK is going to be better off with a Labour government or not.
Yeah, very interesting. I mean, I think we're, as you said, in the next couple of months, we'll really see the impact and the sort of drastic changes and the, less drastic changes that from a Tory to Labour government we'll see, and we'll definitely mention in the in future episodes as well. We're gonna go quite heavy on crypto now for the next few minutes. So Jeremy, there's been, as I mentioned at the top, there's been some smaller crypto news, which we're gonna touch on, maybe a bit more light-hearted ones, but then we're gonna jump straight into kind of the ETFs as well, and the ETFs that are on the horizon. I know we kind of briefly touched on Ethereum ETFs in last month's episode, but there's also like a Solana ETF on the horizon now as well. So talk to me, what's been happening?
So looking at the ETFs, Bitcoin's price has been ranging between your 60,000 and 70,000, and I've observed that every time that we have the market doing well, we have a pump. The ETF inflows are really high. However, when the market turns now, you're having outflows. For example, in the last few days, we had about 20.5 million outflows from the Bitcoin ETF, and Bitcoin is currently around 53k at the minute after losing that 60k support, which I'll touch on later. So I'd say that it's mainly your boomers. It's not necessarily smart money that's actually investing into these ETFs. It is definitely your boomer investor that's quite inexperienced. I'd even say more inexperienced than your active normal retail crypto investors. So definitely the ETF inflows are interesting to watch, and when I'm seeing more outflows, more fear in the market, it's more confluence that these aren't necessarily your smart money investors. But now we had another ETF approval, which was a Solana ETF recently, which was very interesting to see. And like me myself, I didn't anticipate that was going to happen this year, even though I'm one of the biggest Solana bulls. That's my top 2 or 3 coins. This cycle definitely. I say I hold a lot of Solana, and it was surprising. And it does make sense as well in hindsight. So yeah, it will be interesting to see whether that will be approved this year or you know perhaps next year. But we'll have to see how that goes, as they have to complete the S1 filings, which is your normal procedures that you do before you get an ETF approved. Looking at the Ethereum ETF now, they have kind of finalized the S1 approvals, and now we're just waiting to see when we're going to get that announcement for the Ethereum ETF that's going to be live for inflows and outflows. And I touched on the open interest last episode on Ethereum, and it will be interesting to see if we have that catch-up play from Bitcoin and Ethereum open interest to see if there's more activity on Ethereum and investment. I do anticipate that inflows will be lower initially, but we'll have to see, as Wall Street does love Ethereum, as you could do your DCF models, you could kind of value Ethereum as you have users. You can use Ethereum practically for, technological purposes, and the Ethereum team is there. You have Vitalik behind Ethereum. Ethereum's constantly being upgraded and things. So it makes more sense for Wall Street investors to kind of understand what Ethereum is and the practical uses, as Bitcoin is more of like a store of value. It has properties very similar to gold, limited supply. So in terms of value in Bitcoin, it's totally different to Ethereum. And I think Ethereum will be kind of a Wall Street favorite this cycle, along with Solana. So we'll have to see the kind of inflows that come in from the Ethereum ETF I do anticipate it will be marketed quite well. So that's my thoughts on the Ethereum ETF.
Yeah. You mentioned Biden putting pressure on the SEC, obviously for presidential race gains, but what sort of specific impact is he having on the SEC? Have you seen any movement by the SEC due to kind of, the Democrats' pressure on them?
Yeah, so this was around June. So I think it was the start of June. We had Elizabeth Warren actually, from the Democrats, actually write a letter to the SEC, actually pushing them to approve that Ethereum ETF. So it was quite interesting to see that after Trump came out and said, "I'm a crypto president," and and this is another thing about Trump, like you're having investors from crypto donate millions towards Trump's campaign and kind of stroke his ego, and he's a very egocentric person. So the more that happens, the more involved he gets in the crypto, you know, industry, and you're seeing rumors like Baron Trump getting involved in some of the meme coin activities and things. So it's very interesting to see, and I'm seeing messages between him and key celebrity figures like Andrew Tate, and it's very very funny in my opinion. So I'd say the Democrats, specifically, just going back to the Democrats, they so Elizabeth Warren wrote a letter to Gary Gensler, SEC chair, to kind of approve that ETF, and literally a few days later, we had the news that Ethereum ETF may be approved, and we had a massive candle on Ethereum. So I guess that the more votes that Trump gets, and the more like crypto centric he is, the Democrats retaliate, and then you kind of seeing something being passed, some regulation, being changed to kind of support the Democrats. So that's kind of what's going on between the two.
Hmm. Yeah. Dylan, I'll just quickly come to you. I mean, I feel like Trump, whenever there's chaos, I mean, there's crypto in a way, especially from an outsider's point of view, can be deemed as chaotic all the time. And now with this added sort of, celebrity meme coin saga and stuff like that, I feel like Trump likes to jump in on the chaos. But equities wise, let's say the vote was tomorrow and Trump turns up to be our president. What equities kind of impacts can we see? And how would he govern differently to how Biden is?
So I think with equities, obviously, Trump is very big on the military, as is Biden. But under Trump, um, I believe we had a lower military spending. Um, so I believe that obviously the defence sector might struggle slightly. Um, I think some for US banks may see perhaps some more freedom. Um, and I think overall, the overall equities market, specifically like the Magnificent Seven, um, we've seen Amazon, Microsoft all have issues with many antitrust regulators. And I think under Trump, there might be some more freedom with some of these companies where they might be allowed to grow in the way that they want to. Um, so I think sector wise, definitely defence and perhaps banks. But you never know, Trump could turn a corner and decide that defence spending needs to be higher. So it's really a case on what he would decide to do. But I think overall, I think a lot of companies, especially the larger ones with larger market caps, will definitely have a lot more leeway and freedom in terms of their day to day business operations.
Yeah, agreed. I guess we'll find out and see very soon. Jeremy, when we were prepping for this episode, you said to me you wanted to cover. Now, I have zero idea about this. Obviously, I told you I'm not that clued up on crypto. I mean, just everything I know is basically thanks to you. But you wanted to cover someone or something called Mr. 100. So I'm going in this completely blind, and I think the majority of our listeners will be too. So talk to me. What is that, and how is it affecting markets?
So I'll go back, and so we all know the company MicroStrategy, and this company is a technology company that has reserves of Bitcoin, and they buy a lot of the time the DCA into Bitcoin, dollar cost average, and they're kind of like a beta play for Bitcoin. So if you want exposure to Bitcoin, but you don't want to directly invest into Bitcoin, MicroStrategy is a good kind of way to do that. And throughout MicroStrategy's DCA and just buying Bitcoin, you're seeing that Michael Saylor's net worth or company valuation is just going higher and higher. And now he's a multi-billionaire, and the speculation he might be the first trillionaire if Bitcoin hits that 500K or $1 million price target. So you're seeing a lot of billionaires look into what Bitcoin is, and the penny drops, and they understand the technology, the kind of trade that they're taking against the US dollar. So we all know Michael Dell, who is a big founder of the Dell company that specializes in computer softwares and things like that. So he's come out and posted a picture of a Cookie Monster eating Bitcoin cookies. So it's surprising to see, and that's just indicating that he may be starting to accumulate Bitcoin in a rapid pace. And he's tweeting back to Michael Saylor. They're commenting under each other's posts and things. So it's interesting to see there's another one on board. And Michael Dell's net worth is significantly higher than Michael Saylor's. He's he's doing very well for himself. So I'd say if he starts to incorporate Bitcoin with his company, or just him himself starts accumulating Bitcoin a lot, we can't see a lot of buying pressure. So that would be very interesting to see. And by him involving himself in crypto, there'll be a lot of questions asked, people looking into it, and then we have that domino effect. So it was very interesting, and people did not know this wallet because it was a wallet that was buying Bitcoin at a rapid pace. No one knew who it was. So the name for the wallet is Mr. 100. So there's speculation that it is Michael Dell that's rapidly accumulating Bitcoin, or it is a country that's actually accumulating Bitcoin at a rapid pace. So that's a good sign for crypto at the minute. However, there are a lot of opposingly bad signs as well that's coming for crypto as well. Looking at the German government that are literally dumping their Bitcoin onto the market, and you're having key players as well do the same. So it'll be interesting to see if you have whales like this trying to absorb that selling pressure and kind of get those Bitcoin on some sort of OTC deal, or just on the market. So we'll have to see.
Yeah. Well, that's interesting to hear about, man, and I'm looking forward to it being mentioned in future episodes as well. Kind of seeing how it's going. I was expecting Mr. 100 to be a person, so it's good. So it's a wallet. That's good to know. I was expecting to be some like super secret guy or something. But but anyway, you wanted to touch on your crypto price action and your forecast for the future. So let's start with the US dollar index. What factors are contributing to the current strength of the US dollar index?
Yeah, so you're having a DXY, the dollar index, which is essentially the US dollar against a basket of different currencies. So your euro, yen, Swiss franc, so on. And this is normally inversely correlated to Bitcoin and risk assets, as the dollar is seen as a safe haven. And every time there's rate hikes or some sort of scare within markets, you have markets pull back and the dollar index push higher. And recently you're seeing the price action of the dollar index looking quite weak on a technical basis, and you're having rate cuts that are potentially forecasted, which may ignite some sort of pullback in the DXY, which should give a lot of upward trajectory towards the to Bitcoin and your stock market, your risk assets, as Bitcoin is pegged towards the dollar, is the denominated currency. So the weaker the dollar, the stronger Bitcoin is, as is the numerator. So looking at the DXY, it's looking quite weak, and if we start losing key levels of support and things following your unemployment data, following the CPI data next week, then you may see some sort of pullback within the DXY. And this will consequently lead to markets actually having an easier, way to move higher on any sort of news or anything. So it'll be interesting to see.
Yeah. And just before we move on to one of my favorite topics for today, a potential new stock exchange, what else do you want to talk about, crypto forecast wise, maybe about cryptocurrency futures?
So I'd say just reiterating the fact that crypto is pulling back right now, and most of the summers, in my experience, I've had about two crypto summers so far. Like most of the summers are quite boring. Volatility is at all-time lows. So you have indicators like the BBWP, the Bollinger Band with percentile difference, which just is a volatility indicator that just shows interest within the market. And you're seeing that they're at all-time lows right now, and your Bollinger Bands are squeezing inwards, which indicates normally a 30% move in either direction. It's a directionless indicator. It's just a volatility measure. So we may have a big pullback towards the 40k regions, or subsequently, if we reclaim 60k, we may have a pump. So I'm leaning towards us pulling back towards 40k actually, which isn't the best, but it's opportunity. So I'll be actually quite excited to accumulate more Bitcoin at 40k, which is just another gift. I'll definitely say that we have the German government selling Bitcoins. We have an exchange called Mt. Gox, which were a big, custodian of a lot of Bitcoins and cryptocurrencies from investors years ago, around 2013, I believe. So over 10 years ago. And this exchange actually had to close down, which led to customer funds being locked up for time. And now today, in today's price, those Bitcoins are worth significantly more. So for them to come onto the market, it's about $9 billion of sell pressure that may come to the market, which would definitely lead to Bitcoin pulling back. And the speculation that as Bitcoin is pulling back now, the reason for that is the Mt. Gox selling pressure. But I do want to add that although these investors may get some of their funds back from Mt. Gox, they were crypto investors, and of course they'll take some profits. However, they are crypto investors, they do understand the technology, and most likely not all of them will take all of the profit. We won't see a $9 billion, outflows from the market. It may be a little bit, but I do think over time it does get absorbed. And I just want to talk about the backwardation and the extreme contango that we're having in the market. So backwardation is just where the forward price of an asset is lower than the future price of the asset. However, when you have extreme contango, the forward price of any like financial instrument is significantly higher than the spot price of the asset. So in the market recently, we were seeing that we're having extreme contango within the market, which led to me thinking early on that Bitcoin may come down towards that 40k region around the 60k range. And I was very cautious about this because when you have extreme contango in the market, people are too euphoric, they're too kind of bullish. You're having sell pressure come in from different news outlets, and you're looking at the price, and I'm thinking, if we're losing this 60k region, 40k is 48k, 45k is not too far. As on the Bitcoin chart, we have, inefficiencies as we rallied straight up from 48k. So typically you see in markets, if you rally straight up and you have some sort of consolidation, if it's prolonged for a few months, there's more likelihood of it coming straight back down, which is called Wyckoff distribution. So it was interesting to see that we're having extreme contango within the market, although we do have a lot of liquidations above us, which is just selling pressure, people short in the Bitcoin price. So it will be interesting to see if we do get to that 40k region. We have funding rates extremely low and a lot of liquidity above us. So on the way back up, I'm sure that Bitcoin will definitely hit that 100k region onwards and upwards as well. So beyond that.
Yeah. Amazing, bro. I mean, these parts of the episodes like this is what really interests me. I mean, it's stuff that I have no idea about, and then I leave just wanting to know more. And it's when you like specialize in a certain subject or in a subtopic of that subject, then you can use, and as I'm sure you do, you can use this info in interviews as well, as we talk about in loads of episodes beforehand. But Dylan, I wanted to come to you with a story now. So in early June, I sent you a link to an article that said brand new stock exchange question mark, and it's a Texas stock exchange that is looking to be launched, and it's backed by BlackRock and Citadel Securities. It's very interesting, something that could have a significant impact on the markets. What's happening with it? Is it looking to actually be launched, and what can we expect it to do in the future?
So the overall backstory, which there was a few issues with originally, was BlackRock had issues with the Texas local government. It was to do with some sort of area of ESG, which meant that BlackRock was going to pull funding out of the area of Texas. I don't know the details all too well, but obviously, like you said, sort of early June, it's this whole new stories arose that there's going to be a Texas stock exchange backed by Citadel and BlackRock, and I believe it was over 5,000 private equity companies that were also going to back it. Um, and the whole idea of it was they wanted to make it the CEO's stock exchange. They wanted to make it more CEO friendly. How they will do that is not overly clear. They want to promise that there's going to be greater transparency and liquidity. They want the market to be run smoother. There was even talks that they might even run the markets over the weekend as well. So sort of how the crypto markets are. Whether that will happen is another question. Um, but Texas overall, in terms of the region, is known as quite a business-friendly environment. Um, a lot of businesses do headquarter there. So obviously that's definitely a favourable aspect of it that can definitely draw companies in. Um, I do have a few issues with it. Um, Firstly, there has been regional stock exchanges before. I believe there was one in Alabama. I believe there was one in Boston, Philadelphia. But what happens is because they're so small, you have leading stock exchange groups like the Nasdaq and New York Stock Exchange. So what often happens is they merge into the larger stock exchanges. So the fact that it's backed by so many private equity companies makes me think to an extent that perhaps this is what the outcome is planning to be. It will be a Texas standalone stock exchange for a couple of years, and then perhaps once it grows in size, perhaps it will be bought by the New York Stock Exchange or the Nasdaq or the Dow Jones, whichever average there is. So that's one issue I have with it. Um, and also, the thing is, in America, there's a lot of public companies that have gone private. So I have a figure here. In 1996, there were 8,000 companies on US exchanges. Today, that count is only 3,700. So more than half of the companies that were public in 1996 are no longer public. So obviously, Larry Fink has said, and the CEO of this Texas Stock Exchange said that ultimately they're creating it to combat this issue. And there are many companies in the Texas region that are set to go public. So this can definitely counteract this issue. But it obviously you can't argue with over 50% decrease in public companies in the US. Um, so it's going to be a case of seeing what happens. I believe they filed for registration with the SEC. So once that's all approved, it's once they get the ball rolling, you're just going to have to find out what happens with it. But overall, I believe there's a few issues that might arise with the new stock exchange.
Yeah, very not a topic, not a story I was expecting to see in June, but one that we'll definitely see. I mean, you mentioned the Boston Stock Exchange. I mean, we saw good regional economic growth when that did launch. Agree. I find myself agreeing with you about, it'll probably will be bought by one of the bigger ones, but I guess we'll see. Maybe it'll be different, but as you said, yeah, it's backed by private equity, so it's kind of their job almost. Um, Jeremy, you wanted to talk about some big Bitcoin trades that you kind of see happening or that are happening. Correct me if I'm wrong. I think there's one with a Bitcoin Ethereum trade and then a Bitcoin S&P 500 catch up trade as well. Talk to me about them. Why the significance and why do you want it? Why should they be done?
So when you look at the ETH BTC chart, that's essentially a chart to indicate whether it's a good time to get into altcoins or not, as Ethereum is seen as the father of altcoins. It's one of the biggest altcoins with the highest market cap. So with the Ethereum Bitcoin chart, it's looking like it is essentially getting ready to break a downward sloping trend that is more than a year old, which is very significant, as if it does break above that trend and start moving upward, it indicates that strength is within Ethereum as opposed to Bitcoin, and we may get some sort of alt season. Another good chart to look at is the Bitcoin dominance, which is just a total amount of market share or dominance that Bitcoin has, which also indicates if it does go up, then most of the money in the market is within Bitcoin, as Bitcoin is seen as a store of value, is less volatile than your altcoins. So if Bitcoin is coming down or Bitcoin is doing extremely well, you'll see dominance move upwards. However, we have a massive rising wedge, which is a bearish bias market kind of pattern, which indicates that if the Bitcoin dominance does start moving downwards, then you would see a lot of strength within altcoins and altcoin market doing quite well. Now, I am in favor of the Bitcoin dominance still remaining high for at least the next, well, this quarter. So maybe perhaps if we do get rate cuts, Bitcoin does find some ground as it's currently moving down at the minute, then we may see Bitcoin dominance finally top out, move down, and Ethereum against the Bitcoin chart start to move upwards. And this can be happening as soon as next week if we get the Ethereum ETF approval. You may see some sort of shift happening with the market. So I always like to look at the Ethereum Bitcoin chart and the Bitcoin dominance chart when there is a massive pump, a massive dump, any volatile move within the Bitcoin market. It's always good to look at these charts to see what's happening behind the scenes, as you may get some trap scenarios as they're measured against each other. So if they're all going in one direction, something's wrong, and you may see mean reversion happen. You may see something happen within the markets, whether as we seen in April, altcoins came down massively and Bitcoin dominance skyrocketed. That was very interesting to see, and you have these key metrics that gives you kind of a hint before it happened. So, and moving on, I do say that the S&P and Bitcoin is largely correlated within bull markets. So you could go back to 2020, 2021, and you'd see that Bitcoin is kind of like a higher beta for the S&P. It is mainly correlated. However, recently you're seeing a big divergence where Bitcoin is moving down massively, but the S&P and the Nasdaq's actually making new highs. So I do see a catch-up trade, whether that is the S&P comes back down to where Bitcoin is at the minute, or Bitcoin catches up towards the S&P, and I do think it is the latter, where we will see a Bitcoin catch-up trade towards the upside, where a lot of that liquidity, we have about $10 billion of short liquidations above us, and Bitcoin always moves towards the majority of the liquidity. So I do see us rampaging up in due time. So just looking at that divergence is another confluence for me to know that Bitcoin definitely will have its season, but we're just having a lot of institutions come into the Bitcoin market now, and it's definitely kind of changing the game. And my thesis on this was we broke all-time highs before the halving, so that's never been seen before, as I mentioned before the previous episode, and that was kind of confluence for me to know that like the price action on Bitcoin has definitely changed with institutions coming into the crypto game. You're seeing altcoins crashing massively, and there's only a few altcoins that are doing quite well. And I definitely have adjusted my portfolio to kind of combat this, as we're having high, fully diluted valuations within altcoins, which just means that when you're having more unlocks, like I mentioned last time, then the price of those altcoins come down as the supply on the market of these tokens are being distributed quite a lot, which is having a lot of selling pressure on these altcoins. There's a lot of altcoins being listed nowadays, so there's so much to choose from. And if you look at the YouTube views for the main crypto influencers, or you're looking at Google searches for words like Bitcoin, Ethereum, there are all-time lows, lower than even the bear market. Like, we're at those levels where there's literally no interest within the crypto market. So looking at these metrics, it's interesting to know that, or insightful to kind of indicate that altcoins are potentially not the best time to accumulate right away. Like, it's good to get the top 10 conviction bets that you do have and accumulate those on the way down, but mainly DCing into Bitcoin and waiting for the dominance to come down, ETH BTC to show signs of strength for the altcoin market. That will be where we have that pivot point, and altcoins will do quite well. When retail comes in, you're having a lot of demand to kind of soak up that supply. That's where we'll have kind of a good run for Bitcoin. And just touching on the Bitcoin against the Nvidia chart, we've seen that the chart is downward sloping still. It's coming down, and it's another divergence where we're coming to key areas of support near the all-time lows. And normally when we do touch this area around the 5 billion market cap level, we do see a reversal where Bitcoin starts to outperform and becomes again the number one performing asset. So it'll be interesting to see if we can do that in the later stages of this year. Just looking at events as well, again, where you're having wars and different military events that happen, it's definitely going to affect the Bitcoin price as well, the gold price as well. So a combination of this with rate cuts, with quantitative easing happening, as we're having the liquidity cycle start again, which is a massive point. You're having a metric called the M2 money supply, which measures the amount of liquidity within markets. This is starting to tick upwards. The histogram is showing that liquidity is starting to be pumped into markets, and typically this is correlated to the Bitcoin price, where you do see Bitcoin doing really, really well when the M2 money supply starts rising. So these are the key kind of points that I do see within markets, and it'll be interesting to kind of see the reparations on this. But as for altcoins, my main ones are definitely Solana, as the meme coin whole narrative when retail comes in, and even now you're seeing that they are pegged against Solana. So it's a good way to make more Solana, as if your meme coin does well, you're selling back into Solana, as you do have the Solana meme coins. They do quite well, and then it's always good to take profits into Solana. So I say that's a key one for me. And you have coins like Ondo, you have coins like Rune, you have coins like Brett as well, which is a meme coin. You have I'll say Kujeria and Atom, which is the Cosmos ecosystem, hasn't seen too much attention, and also the gaming industry hasn't seen too much attention this cycle. So I'm paying attention to those sectors to see the best coins, as when attention does cut towards those undervalued coins, they will definitely outperform. And it's always good to not chase the hottest narrative and be well positioned, so that by the time the market catches on, you're already in those coins and you're starting to take profits.
Yeah. I think that's exactly where we see your trading expertise come in, bro, on the point you just mentioned. And I really appreciate you going into depth on that as well. I think we're coming on to the tail end of the episode, and I'm really glad you mentioned Nvidia, Jeremy, because I wanted to come to Dylan and kind of talk about Nvidia. I mean, I feel like in all of our episodes we kind of touch on it a little bit, but it's quite prudent for us to do so now as well. So in the last month or so, Nvidia became the largest company, and then it dropped half a trillion, and now we're sitting like the top three or top four, I believe. Dylan, talk to me about how that happened and the reasons why it kind of pumped so much, and then we just see a huge drop.
Yeah, so I mentioned on my last episode about Nvidia. This was when they announced the stock split, the increase in the dividend, and I remember saying a point how I believe that with the stock split, it makes the share, the individual share, a lot cheaper and accessible for investors. And I believe that with that accessibility, we've seen see the share price rise, and exactly that happened. The After the stock split, the share surged to, I believe it was $135, and that's roughly the point where they top the world in terms of market capitalization. The reason why it didn't stay where it was it was purely the reason why it fell was because there was no specific company performance that made it rise. It was just based on there was a stock split, people wanted to get in. So it wasn't like they released any new fantastic news. It's not like they had any data come out about their sales or any peaks towards their newest financial report. It was just purely based on it was a fresh stock split. It happened on the 7th of June, which was a Friday, and then began trading again on Monday afterwards. So it was a fresh stock split. Investors who maybe missed out on Nvidia when it was $1,200 a share saw this as an opportunity to get in, and they did. And I believe when it topped the world in terms of its market cap, we saw a sell off. It was only a slight sell off, but obviously there's still commotion whether it is a bubble. We say this every single episode. People have been saying this for the past year now. I don't think it is. However, I do believe that obviously, why wouldn't investors maybe cash in on their gains from Nvidia, especially since it's a top company in the world? So I believe that's why it had a short sell off. And I believe it was Monday the 24th of June, they actually lost 13% in they lost 13% in the share, and nearly $500 billion in market cap they lost. But it seems to be it was on the rise yesterday. So I believe all it was just a sell off, investors cashing in on their profits, and I don't think it's too much to worry about in terms of Nvidia. The price to earnings ratio is still very high. I believe it's at 72 as of yesterday. So in terms of what Microsoft and Alphabet are doing, there sits at roughly 35, which is still considered relatively high. So it's colossal in comparison, but they just don't seem to show any signs of slowing down. So I think for the foreseeable future, they're going to continue to have very strong stock performance, especially now they pay a dividend. They seem like a much more stable company to investors, where you have the benefits of capital appreciation and share price rising, but also a little bit of income on the side, which is definitely going to be a favourable aspect of Nvidia.
Amazing, bro. Amazing. I mean, I think we've covered a lot this episode. I mean, and that's what I love the most about this episode. It is really like almost like month, 4 to 6 weeks full overview from crypto and equities aspects, and like an overall economic overview as well. And the main reason we do this episode is because our other episodes are a bit more career based, and so for our listeners who kind of still want to be clued up on the finance, sector, this kind of gives you a few points to maybe delve into a bit more yourself as well. I look on to next week's episode. Yes, we're back. We're back staying consistent. Next week will be episode 18. We'll see you then. And the guests that we have lined up for the next sort of 5 to 6 weeks, and even in the future, There's some really big names, some really professional guests, and maybe even some collaborations coming up in the future as well. So it's only onwards and upwards for the Dumb Money team over here. So we will see you in a week's time. And for Dylan and Jeremy, thank you for your time again. We'll see you in about 4 episodes time in about a month. But if you are watching us on YouTube, then please be sure to hit the subscribe button if you aren't already subscribed, and make sure to have that notification bell pressed so you don't miss any videos from us. If you're listening to us on any of the audio platforms, be sure to give us a rating and follow us as well so you don't miss anything on there. Our social media platforms, Dumb Money ones and personal ones, are all in the bios of our YouTube and audio platforms, so be sure to give us a follow in there and engage with us there too. If you've got any topics you want us to cover, then please be sure to reach out in the comment section. And if you have anyone you want to come onto the podcast, or if you want to come onto the podcast, then don't hesitate to reach out. But we'll see you in a week's time, and as always, stay tuned.